Hello, good morning, good afternoon, and good evening to everyone who is joining us today from all over the world. My name is Mia, and I'm co-chair of the Speaker Relations team for the China Gulf Forum. It is my great pleasure to welcome you to the Business and Entrepreneurship panel of the China Gulf Forum 2022. We are extremely grateful for all the amazing speakers who will be participating today. This panel will be a moderated discussion followed by a Q&A session. The discussion will last for approximately 1 hour, followed by a 15-minute Q&A. You can send your questions to the Q&A box and our moderator will go over them after the panel discussion. We will then have a 10-minute break before our next panel. This panel will discuss the outlook on the entrepreneurial innovation ecosystem in both China and the Gulf region, and from both an entrepreneurial and investor perspective. So please allow me to introduce our panelists and our moderator for today. Our moderator is Ms. Amira Khalid. She is the creator and host of Inspiring UAE Women podcast. She is also currently the Vice President of Investor Relations and Communications at Waha Capital, which is an Abu Dhabi listed investment management company. Our panelists include Mr. Walid Faza. He is currently the partner and chief operating officer at MSA Capital, where he is leading investments, partnerships, and running operations in emerging markets with a focus on the MENA region. With over 12 years of experience in the region's venture capital industry, he has helped startups and entrepreneurs plan, build, and scale businesses that are aligned with their vision to grow and excel in their markets. We also have Mr. Jamil Diab. He is the Enterprise Business Development Manager at Magnet. He has been an active member of the MENA startup ecosystem since 2013. Throughout his career, he has founded and joined regional startups in Lebanon and the UAE. He has also participated in an accelerator in Kuwait and managed a government-led entrepreneurship program in Saudi Arabia. And finally, we have Mr. Max Song. He is the founder and CEO of Carbon Base, which is a Hong Kong-based climate tech startup leveraging data science and blockchain for enterprise solutions to measure, manage, and reduce carbon emissions. He is passionate about mobilizing the capabilities of tech and finance to realize the promises of UN Sustainable Development Goals. He is also the recipient of the 2021 Generation T Tatler List and a 2021 Forbes 30 Under 30 recipient. So without further ado, I will hand over the time to Ms. Khalid to start the conversation. Thank you.
Thank you very much, Mia. It's a pleasure being on this panel, and I'd like to welcome all my panelists first. Now, in recent years, the Gulf countries have attracted a large amount of attention from talents and capital due to their increasingly open policies, maturing and stable business environments, and outstanding educational systems. In this panel, I'm pleased to invite founders of new technology-driven companies from the Middle East, as well as Middle Eastern and Chinese investors from leading private equity funds to focus, disperse, and share their knowledge of the entrepreneurial innovation ecosystem in both the Gulf and China, their insights on the entire growth cycle of companies from 0 to 1, and their experience on the exchange and application of technology between the two regions to drive bilateral high-quality economic development. The discussion will also focus on, but not be limited to, the evaluation of business ideas when starting a business, the difficulties when proceeding to realize those ideas, the strategies taken for a transition to a management-wise company with stable business and cash flows, and challenges in sustaining the growth of future businesses, all from both the investors' perspectives as well as from the entrepreneurs themselves. Panelists can also specify the uniqueness of the Gulf region and how entrepreneurs and investors can tailor and value the businesses specifically targeted for the region. My first question is to Mr. Walid Faza. To initiate our conversation, these two terms, VC and PE, are not new to our audience who have been following the entrepreneurial field for a long time, but we know they both have differences and commonalities. Mr. Walid, could you please briefly discuss that with our audience who is new here?
Thank you, Amira, and thank you for the China Gulf Forum and all the efforts that you have put to make this possible. I was also watching the last panel, and I think it's incredible caliber and incredible information that is being shared. So thank you all for that. I've been in the venture capital space for 12 years. So I can tell you very much what venture capital is. I can tell you a little bit about what private equity is and my understanding of it. But the basic assumption here for our audience is um, the concept of risk and return, right? So the idea is if you put in very high risk, you expect a higher rate of return. The risk stating that it could be a high risk of failure as well. And as you may know, there are many stages in the life cycle of a company. And as you grow your company, you start with an idea, and then you start with seed capital, you go through venture capital, and then you graduate to private equity, and then you may then be acquired, or then you go through an IPO and go into public markets. So if we differentiate what public is and what private is, in the private fundraising or finance kind of section of your company life cycle, you will initially have very high risk when you start your company. And then as you stabilize and as the company starts to grow, then you will attract a different kind of investor, which goes into private equity. So all of this side, before you go into the public, private means that it's not open for everybody. And it means that you get to, for the most part, pick your investors and pick who you want to be as part of your journey and your cap table. Now, venture capital, it ranges between what we call seed, Series A, Series B, and Series C. And this just delineates how many times the company has been able to raise capital and where that capital is coming from. So my understanding is venture is exciting, venture is unknown, and you will get to lose a lot of money, but hopefully gain a lot of money as well when you deal with that. As you go into more private equity, the rounds become bigger. So if we just take numbers, just so that we can wrap our heads around it, private equity typically values companies that are over $100 million, are much more stable, they're usually are profitable. So it's a company that has sort of graduated from the very high risk initial few years, which venture capital comes in. So venture capital will come in from valuations roughly from 0 to around 80 to 100 with successive rounds of funding. And then private equity will take care of that, and hopefully they'll graduate to public markets. So that's very roughly just putting the parameters and structure of what VC and PE is.
So, Mr. Walid, following my previous question, why are both venture and private equity crucial to the entrepreneurial field? And how would you, let's say, value a startup company? What would you consider or take into account when it comes to determining if a startup is actually worthy of investing? And what are the industries today that attract most attention from capital markets?
Okay, there's a lot of questions in that one. I'll try to break it up in smaller pieces. Why is VC, venture capital, and PE important? Because these are the people that will fund you, and money is important in order for you to build your business, because you cannot do it without that. So the foundations of making finance available or access to capital available is very, very important in getting the companies to where they need to go and at the levels that they need to be in. So let me sort of set the stage a little bit, and let me talk about China, and let me talk about the Gulf, because this is what this forum is about. So the Gulf, over the past, I started back in 2009. 2009, I was part of a fund that invested in a company called Maktub that got bought out by Yahoo for $160 million. It was the first time something in the region, in the technology field, got the attention of an international company to come in and acquire it, right? And since then, since 2009, the industry or the ecosystem has been slowly progressing. You didn't have any incubators or accelerators or sovereign wealth funds or a lot of VC funds at that time, but that moment created a ripple effect in the proliferation of tech companies in the region. So today, and as Jamil will tell you a little bit later on, there has been incredible growth in funding, in exits, in the amount of startups. So when I used to see maybe 50 or 60 companies a year, today we see literally double-digit thousands of these companies. So I get 5 or 6 different business plans a day, and I'm only one venture capitalist. So you can see that this has grown in a very big way. China is way ahead of the game. So China, maybe we're 5 to 10 years behind what has happened there. MSA Capital has had 8 IPOs in 2018. The region, and Jamil will correct me if I'm wrong, has seen only a few. So in a single year, one VC fund, which is MSA Capital, had 8. In the region, I think maybe last year, we may have had 2 or 3. So there's still a lot of evolution to go. In order to do that, you need capital, you need talent, you need capital, you need access to markets. So all of these different data points make it, they're the main data where we would make an investment decision. So your second question is, what would we invest in? What are the sectors that we're looking at? In emerging markets, such as the Gulf and the MENA region, we typically look at big total addressable markets and great founders. Why? When you look at it from a venture capital perspective, you need to create scale. So we're always talking about month-on-month growth. We're talking about how fast the company can go into different geographies, because you need to create a critical mass so that international companies can acquire you, or that you can eventually go into public markets. So when you are looking at financing through VC and through PE, you're looking at very fast hyper growth, and you're looking at building companies that can scale into several geographies. As you know, in the MENA region, in the Arab world, we have 22 different countries, different dialects. It's very difficult to get licensing. It's a conundrum to be able to scale your company. And that's why, if you're able to do it, like the successes that we've had. So for example, Souq.com got acquired by Amazon because they were able to go into several markets. Careem got acquired by Uber because they were able to scale into several markets. Delivery Hero bought a lot of the food delivery companies because they were able to scale in a lot of markets. So it's very important to do that. So from a venture capitalist perspective, when we take a look to assess these companies, we want companies that have innovative ideas, that are able to scale, have great leadership, and have big total addressable markets. And that's when we can come in and help. So from MSA's perspective, so I can give everybody a little bit of information. We were the sector leaders in much of the different industries in China. So ride hailing, we invested in Didi. Last mile delivery, we invested in Meituan. Gene sequencing, we invested in BGI. So we're really sector leaders in what we've invested in China. As we look at emerging markets like the Gulf, we're really looking more into consumer plays, fintech, enterprise. Those are the things that are going really fast. So for example, we've invested in a company called Kitopi, Swivel, HomeSmart, Tabby, which is the buy now, pay later for the region. So those are the kind of very fast growing emerging market plays that we take a look at that is different from China. So what's the difference? Not a lot of deep tech, not a lot of very deep core innovation that we're seeing in the Middle East. I think that is changing, but just on the surface, those are the kind of companies that we've invested in and that we take a look at. I hope I answered most of the questions that was set out.
Yes, thank you so much, Mr. Waleed. Mr. Jamil, would you like to add anything to this, given that you kind of have access to all the data? I'm sure you'll be able to offer some brilliant insight as well.
Thank you, Amira. To be honest, Waleed put a very good cover on everything that was asked. I guess just diving deeper into the importance of venture capital in this region, you will see that the development of the entrepreneurship ecosystem really relied on the creation of venture capital in the region. It didn't come the other way around. It was the national incentives that were put in place by public institutions in the region that eventually led to the catalyst that created the entrepreneurship ecosystem you see today. So the difference between venture capital and private equity, which existed for a while in the region, is with venture capital, the level of risk involved is really incredibly scary for most traditional investors. in the region, we're starting to see the private sector move more and more towards this market, and even starting to see more traditional investors move more and more towards technology. But in the beginning, certain incentives had to be put in place, like, for example, the sovereign wealth funds in Saudi Arabia, in Kuwait, in the UAE, central bank initiatives in places like Lebanon, Ministry of Investment initiatives in places like Jordan, to try to get this engine running. What we can see today is it's starting to take shape by itself, and the private sector is starting to outpace government initiatives, which is a very positive sign. Now, government initiatives, as Walid mentioned, are moving further towards R&D investment and the creation, or let's just say, catalyzation of new sectors in the economy, such as sustainability, which has taken a smaller space within the venture capital ecosystem than places like Europe or the US, for example. I'm sure Max can speak more about that. So definitely the role of organizations like MSA Capital are intrinsic to the creation of this entrepreneurship ecosystem. This is just one thing I'd like to add. Also, when it comes to growth, it's not a market that grows linearly. So you might see that something that started with $10 million funds and just a handful of them in 5 or 6 years ago has now ballooned into billions of dollars in capital being invested into venture capital, and has now led to the creation of thousands and thousands of startups rather than a few hundred, which was the case only 3 years ago, let's say. So this is what's exciting about this space, how fast and how quickly it can grow and change, and how fast new sectors can pop up. So if you look, for example, at the trends, when the ecosystem was first being developed, Maktub is a great example. It started mainly with media and advertising technology. And then from there, it moved slowly towards e-commerce. From there, it has moved more towards the likes of Kareem and Fetcher, for example, when it comes to transportation and logistics. And then from transportation and logistics, we've moved to fintech, which is now the dominant player in the market. And this change happened in less than a decade, each of which now attracts over 500 million in investment as a market. So this is one thing to point out. The other thing is, just to tell you a bit about what we do with Magnet. Our focus is to track venture investments in emerging markets. We started off only in the Middle East, and then we became Middle East and North Africa. Now we're tracking the Middle East, North Africa, Turkey, Pakistan, and all of sub-Saharan Africa. Touching on China's role within this space, besides MSA, there isn't too much activity within the MENA region, honestly, when it comes to Chinese investment. We've had a couple of acquisitions before. We had Jolly Chic buying an e-commerce company in 2017. We had Didi investing in Kareem. We had Alibaba more recently investing in Pakistan and Turkey with 2 acquisitions there. But the incredible amount of activity that we've seen from Chinese investors is in Africa. And now what we're trying to do as Magnet is incentivize the creation of an entrepreneurship economic bloc across the Middle East, Africa, Turkey, and Pakistan, so we can get more cross-border activity. And we're also seeing investors from the different markets start to invest across borders. So we're expecting in the next couple of years to see a lot more investment from Chinese entities into the market, either directly through direct acquisitions or investments in the region, or indirectly by African companies investing or acquiring smaller Middle Eastern companies to grow and scale. I hope that was slightly helpful for you guys to get a better picture of where China is involved and the level of involvement of China in the region.
Thank you very much, Mr. Jamil. Indeed, it was. Mr. Max, would you like to add anything to this from an entrepreneur perspective? Would love to hear your insights as well.
Thank you so much, Amira, and it's a pleasure to be here. So just to build on some comments made by Mr. Walid initially, I think as an entrepreneur, we are on the other side of the table. We're the ones talking to the VCs and trying to raise capital from them. And one of the things I really noticed about my own experience being both an investor and also later an entrepreneur, sitting in Hong Kong, sitting in Silicon Valley, and also sort of doing work in Europe, is that the appetite of risk changes dramatically based on the profile of the LPs, based on the people who are actually seeding the VCs and giving them risk capital. Hong Kong is really interesting. Hong Kong is one of the richest and densest concentrations of billionaires in the world, and a lot of the wealth comes from real estate. As a result, most successful deals originating in Hong Kong have something to do with real estate and not so much to do with technology. in Silicon Valley, where a lot of the wealth actually comes from successful entrepreneurs, investment reinvested into the ecosystem, people are actually much willing to sort of invest in crazy, technology-driven ideas. In reference to, I think, the unique axis of relationships between the Middle East and China, there's really three, I think, major trends we can really see. This kind of builds on the previous session, especially comments around sovereign wealth. So the first one is China's incredible energy dependence. China really needs to secure enormous amounts of energy for its next 20 years of economic development. And this has severe geopolitical ramifications about who it's friends with, what kind of trade it conducts with, and also where it spends its own intellectual energy and capacity. Sitting in Hong Kong, I've worked for Mr. Richard Li, the son of Li Ka-shing, one of the most successful entrepreneurs in this region. And I see the growing interest of Asia to actually invest in Middle East Asian companies, right? So as Mr. Li describes, MSA is actually a really leading example of actually a Chinese originated VC firm actually with strong and successful ties, investment portfolios in the region. The other side actually is also very interesting. I had a chance to meet the Asia rep for ADIA here in Hong Kong, and he actually came to represent the Abu Dhabi Investment Authority interest. And one of the first things he did actually as a calling card was to take a very large percentage stake in 4 of the most leading real estate hotel groups in the region as kind of a way of saying hello, right? And so we start to see more cross-border initiatives actually being developed. The second major trend, I think, is really about the respective economic advantages and comparable advantages available. China has an incredibly talented technology research force that is eager to find opportunities abroad, right? China had to go through one of the most crazy entrepreneurial cycles, and it's more similar to perfect competition than any other place else. In order to survive as an entrepreneur in China, you need to be able to innovate faster than your competitors because there's very little IP protection. As a result, any good idea you have can appear on your competitors' applications tomorrow. So you actually can no longer rest on your laurels. You actually continue innovate. As many of my contemporaries can observe as well, Chinese tech companies also have no intention of staying inside their lane. They're very happy to expand into every other single industry. So you see Tencent doing healthcare, you see Jingdong doing finance. There's no kind of guardrails. In the U.S., Amazon would not go into banking. Amazon would not open a digital bank, but that's something very possible and very reasonable to do in China. The third thing I think is really about what kind of opportunities the Middle East offers, especially Dubai, especially Abu Dhabi, and compared to many other regions in many other countries, I would say the UAE, from my own observation, is one of the most forward-looking policy innovators available because they're actually willing to create new types of regulatory frameworks to actually allow interesting entrepreneurs and interesting projects to come into the region. So we saw very recently FTX, Binance, the world's largest crypto exchanges, actually putting down headquarters in Dubai. And that, I think, is a testament actually to this process. For those guys who are not super familiar with this industry, CZ, who's the CEO of Binance, made the equivalent monetary wealth as Mark Zuckerberg in about 3.5 years, right? And so in terms of the speed at which you can actually become one of the richest people in the world, I think it's like $70 billion or so. This particular industrial track of digital asset and metaverse actually is kind of crucial to understand. And I really hope to see the following. I hope to see strong collaborations between the Middle East and China, specifically on energy technology development, on renewable energy innovation, and also on new monetary policy innovations around climate change. I think these areas are where China's national interest and the Middle East's national interest align, with high synchronicity, and we can actually create kind of new types of opportunities. Thank you.
Thank you so much, Mr. Max. My next question is going to be directed to all 3 panelists. Since we've talked a little bit about sustainability with Mr. Jamil, as in it's a small part of the larger pool, and we've talked about VC, and we've talked about the importance of the energy sector. We're currently going through a recovery phase after a global COVID-19 pandemic. And at the same time, we've got the ongoing Russia-Ukraine conflict, which is causing further uncertainty in the global markets. Do you think that while this conflict has caused short-term spike in prices, is there a possibility that this could actually prompt a longer-term shift towards sustainability? And leading on from that, how does that impact the Gulf region's energy sector? I'll start with you, Mr. Walid.
Okay, I'm going to also break it down a little bit more because I think there's a lot to unpack there. So China is kind of the crystal ball of what happens in the future to the rest of emerging markets, because China has been through SARS previously, and they have seen huge behavioral changes happen as a result of that. I remember when I was in Beijing, coming from the Middle East, my mother told me to always pay the bill when it comes to lunch or dinner. And I was chuffed because I was with my Chinese partners and I wanted to go and pay the bill. And I took out my credit card, and the lady looked at me and she was like, she doesn't know what to do with that. She took out the credit card machine, had to dust it off, maybe hadn't been paid for a while. And I was ashamed because then my Chinese counterpart actually opened up WeChat and just paid, right? So the way that China has been able to adapt in fintech and in social commerce and in gaming and in the way that they conduct themselves and use technology has really surpassed other places that are emerging markets. One of the main reasons why I wanted to look at China and look eastwards rather than always looking at Silicon Valley is because Silicon Valley, you know, you'll have a startup like WhatsApp that'll get acquired by Facebook. If you start something, you know where the market is and you know who you're going to get acquired by. In China, very much like what Max said, it's a bloodbath. You're an entrepreneur there. You're fighting every day to just to keep your head above water, and you need to innovate so hard to be able to, offer things that are not available. Very much kind of what's happening in the Middle East and in the Gulf, because we don't have the rails for logistics, we don't have the rails for finance, we don't have the rails that other economies sort of have taken years and years to build, like in Europe and other places. In the Middle East, and in a lot of emerging markets, we have this fantastic ability to be able to leapfrog into new technology, so we don't have to go through all of the pain points. So that makes things really interesting. Bringing it back to your question, COVID. Everybody is stuck at home. You have a brand new reality of how you want to do business, how you're going to acquire clients, how you're going to make payments, and the behavioral change actually pushed everybody and mandated everybody to be able to interact mobile first, e-commerce, for your food, for your drink, for your health, for your well-being, and that behavioral change is huge. So while the Middle East was growing slowly and kind of looking at technology, do we invest in technology or not? We're still kind of working on real estate and working on oil and trying to do things. This jolt into the system created a paradigm shift where now you could no longer ignore technology. You could no longer ignore what the youth bulge that we have in the region and what they're demanding. So you cannot isolate people anymore from the technology that is used in other places in the world. Now, what does that mean in the greater scheme of things? It means that technology the demand for it is there, but the supply has yet to come. So we're taking models that have worked successfully at scale from China and injecting it to some of the entrepreneurs that are in the region, right? So the playbooks are there. The crystal ball of how things operate at scale from China can then be introduced into emerging markets, specifically in the region. So for example, we have a company called 4Deal that does horizontal commerce. We also helped the UAE build the voice over IP app called Bottom that was also done from Chinese technology. So you can actually see that there's a lot of sort of building this bridge of information technology that is available in China, readily available in China, that then can be implemented into emerging markets, specifically into the GCC when it comes to fintech, logistics, health tech, etc. So that's what we've seen there. What are we seeing with the interruption with trade supplies because of the war? People have become much more aware of hyper-localization and what they need for their local economies to thrive, and can no longer be caught off guard if something happens when the supply chain stops. That also opens up huge opportunities when it comes to technology, such as 3D printing, supply chain, building several different logistics warehouses, greenhouses that are vertical. So I mean, all of this technology now is being pushed to the limit in order to serve the purposes of what is happening through the macro changes on a global scale. And from a venture capitalist perspective, and from anybody interested in technology, this is fantastic. this is the best news that we can possibly come up with. The disruption that is happening at every level, systematically in every industry, is unbelievable. And we're going to see that in technology. We're going to see that in the crypto space, in the metaverse space, in the virtual reality space. And this means that there's a whole new industry that is being created and layered over the ones that we've previously heard of. So I think this is fantastic. I didn't speak on oil specifically, but all of this to say that we are doing a massive shift into technologies and into industries that are not dependent on oil. And I think the governments have woken up to that. I think Jamil also said, you know, the sovereign wealth funds that woke up and said, we have a youth bulge. We need people to be employed. How are we going to do this? Look at the technology sector, look at venture capital, private equity. Let's build these fund of funds. Let's put the money in the hands of the people that can manage these funds and empower entrepreneurship and economic development across emerging markets.
Thank you, Mr. Walid. Mr. Jamil, what are your thoughts on this? Are we looking towards a long-term shift towards sustainability? And are we going to see an impact on the Gulf region's energy sector?
So it's undoubtable that the governments in the GCC are fully aware that they cannot rely on oil and gas forever, right? And for this reason, they've started to diversify their economies in a number of different sectors. A few years ago, the two main areas of focus were number one, technology, and number two, tourism and F&B. Clearly with COVID, tourism took a hit and technology exploded, right? And this is why since then they've doubled down and tripled down on technology, because they saw that this is a more sustainable area of development. And also the solutions that are being created and developed through technology and through the technology landscape in the region have actually massively impacted the lives of unbanked populations across the region. Many different types of experts in the region that were struggling to find positions of work, also in improving the average standard of living of people in the region by developing and commercializing so many different consumer services, improving the operational efficiency of businesses by creating so many B2B solutions within the technology space. So the ripple effects are incredible. And also it's led to the attraction of a higher quality of talent coming from all different parts of the world, right, to set up businesses or at least expand their businesses in the region. So definitely, I don't see this slowing down. If you look at the amount of investment going into the space from the government side, it's only increasing. If you look at what oil and gas firms are doing and holding companies who are in this space are doing, they're taking the profits that they're making and reinvesting them into other sectors, technology being a main one. Now, when it comes to sustainability, this is a bit of a broad term. Going back to what I said a minute ago, within the venture space, they're looking to fund opportunities that have the potential to grow 1000x, which means that they're really looking for commercial businesses that are targeting massive problems within the communities. In the region, when it comes to sustainability, there are different problems that need to be solved in different parts of the region, right? So in the GCC, I wouldn't say energy is a big problem to be solved today. What is a big problem to be solved is food security. You're already, this problem has been spotlighted since COVID as well, because you saw supply chains were disrupted. Now, with the issue between Russia and Ukraine, the majority of the world's grain supply is being disrupted, especially in the region where they're the biggest importers. So they're starting to invest in, as Walid mentioned, greenhouse-related solutions. So, for example, you have Red Sea Farms and Pure Harvest, which were two of the biggest investments in VC in the region, both of whom are in the vertical farming space and in the sustainable farming space. So it depends on which markets you're looking to focus on within sustainability. When it comes to energy, you are seeing solutions being developed, but these solutions are actually driven by the large oil and gas companies in the world. So Aramco has several funds dedicated to creating and innovating within the energy space. You have large universities in the region, including KAUST, for example, in Saudi Arabia, that are investing heavily in creating deep tech solutions targeting the energy space. So again, the solutions within the energy space aren't really organically being developed, but are being developed with intention from government or semi-government institutions. However, within the pure private sector, you are seeing developments within sustainability, but more focused on food security, at least from our lens and magnet.
Thank you, Mr. Jamil. Mr. Song, I'm sure you have thoughts on this.
Thank you. I think the two other speakers have covered a lot of ground. I just want to share some research we've done recently around the formation of the capital markets on carbon. So carbon is a very interesting concept because carbon is actually a regulatory instrument. It does not actually exist in nature by itself, but because of government policy, there's now a carbon market. The European carbon market started in 2005. Today, they're about $700–800 billion. And the US markets have two small regions, one in California and one in northern New England. And China in 2021, June, started their own national carbon markets. These carbon markets actually are the signaling mechanism for market prices around the cost of environmental degradation. By having carbon market exist, we can actually drive huge amounts of industrial scale, capital and market forces at scale to actually innovate and create new policies around reduction and consumption of carbon. Now, one of the interesting things is there's a systems dynamic analysis tool built by MIT that looks at the relative impact of different policy scenarios on actually reducing CO2. And one of the most effective ones they found actually was elevating carbon to a price about $100 to $150 per ton. This actually is one of the most significant drivers. Since the advent of China's national carbon market, there's now an opportunity to do two things. One is actually to import technology into China to help China decarbonize. This is going to be a multi-trillion-dollar effort. The second one is actually to find ways to create negative emission sources outside and actually sell those credits to the Chinese regulatory market. These two things I think are really well positioned for the Middle East to actually participate in. For the first one, if you look at what happened with SoftBank, SoftBank's massive vision fund came from the anchor investment of MBS and the sovereign wealth of Saudi Arabia. And the pitch that Masa actually gave MBS was around the same idea of saying, look, you have a lot of oil wealth, you need to diversify out of oil because eventually oil is not going to become the mainstay of economic development. You need to invest in data and AI because that's the oil of the future. What I want to suggest is that I think solar and renewable energy production is also the oil of the future. And if you actually want to create more investment opportunities, creating trust grade investment enterprise development opportunities in taking natural resource rich sovereign wealth capital and positioning it into the future technological tool development, right? This is actually something that China is already, whether publicly or privately, getting a huge head start on. Most of the solar, wind, and battery production of the world actually is built in China. And if we look to another 20 years from now, that trend is only going to continue as the state continues to invest more in this particular technology stack. And some of my friends have started to talk about the idea of a solar RMB, as opposed to a petrodollar. So what is a petrodollar? A petrodollar is actually the idea that you can only buy petroleum denominated in US dollars. And there's a few exceptions, and more so now with the Ukraine crisis. But the solar RMB says if you want to buy renewable energy technology, wind, solar, hydrogen stuff, maybe you have to settle in RMB, and that actually starts driving economic demand for RMB for foreign currency holdings. So for me, sitting in Hong Kong, I also conclude the following thought, which is that up to now, most of the carbon markets are built on international regulatory policy and national policy design. There's a really interesting type of market inside this called a carbon registry, which actually essentially is a central bank for carbon credits. And one of the things we're currently working on actually is to build a new age blockchain-based carbon registry, a new carbon central bank that actually will assign economic value to carbon drawdown, hopefully in many developing parts of the world, and then also contribute to economic development in those regions, actually driving capital from China's regulatory carbon market into those regions. So, give you back the floor.
Thank you, Mr. Max. That's actually very fascinating. I'd like to focus a little bit more on the fundraising side, given that we've gone through are going through two uncertain events globally. One, we went through a global pandemic. We're still in recovery phase. And following that, we have the ongoing Russia-Ukraine conflict. How does that affect the fundraising for investment institutions from limited partners and the startups from the capital side? I'd like to start off with Mr. Walid.
Thank you. So, as initially I was saying a little bit in terms of we are trying to catch up and fill a gap when it comes to technology, when it comes to creating economic impact into the MENA region. And finally, something that we've been preaching for the past 10 to 12 years, when this nascent economy started to unfold, Jamil now said, there are sovereign wealth funds, and this doesn't look like it's stopping anytime soon, because you have high net worth individuals, you have family offices. You have to understand, the MENA region grew very tribally. So it was very much based on families. These families would bring international companies into the region. They would be a multi-sector office that had investments in manufacturing, oil and gas, real estate, retail, etc. As the new generation comes up and sees what's happening with technology, they're excited about what's happening. They're excited about investing. They're creating a lot of corporate venture capital funds. And we see the money now flowing, very much because of policies and because of sovereign wealth funds that have opened the way, but also because it makes sense. I mean, there's a huge demand on the market to be able to digitize and be able to transform, and we're seeing the money come back when it comes to companies like Kareem being bought out, when we have IPO markets that are becoming more mature. So you're actually seeing the money trickle down. It's no longer, an unknown black hole that you're going to put money into and you don't know what's going to happen. So as these funds and as these investors and as these entrepreneurs start to see money coming in at every level, the LPs that we are talking to right now are actually pretty excited. And I think we're just at the start of it. We are also attracting international funds such as Sequoia and Tiger and many other that have previously never invested in the MENA region. They've opened franchises in other places in the world, but now we're seeing these funds actually come in and invest in the MENA region. So the MENA region is also someplace that is rampant with conflict. So, since the beginning of time, the MENA region has been conflict-ridden. Every decade, every couple of years, you have some new thing come up, right? So I think the youth have become resilient to that. I know my father has, and I know I have, and I know my kids are going to be, because this is just the way that the life works here. We're not going to have, the kind of non-conflict zone because of the economic and political policies that are available. Now, short of a war hitting directly the MENA region, including these big funders and sovereign wealth funds in the Gulf specifically, then yes, then there will be a huge alarm, and we would have to backtrack and find out what life is going to look like after that. But in terms of what COVID did, I think it was a very positive thing. What's happening in Ukraine and Russia, very unfortunate to be able to witness a war in this day and age, but it's also making people really understand where they need to put their money and how they look forward into the future. So my prediction, at least in the short term, is that investment is actually is not going to stop anytime soon in the MENA region because of all the opportunities that are there, because the LPs that are waking up, because the talent that is being imported and homegrown, and because of the opportunities that are there. So yes, there's a lot of macro plate tectonics that are shifting in the world, and they always will be. But you will notice that the Middle East is probably one of the most resilient places because of all of the conflict that we've had over the while. So that's kind of where I stand on this subject.
Thank you, Mr. Waleed. Mr. Jamil, what are your thoughts about this, about the impact on fundraising for investment institutions for startups?
So from what we've seen at Magnet, both from the client side, but also from the investment landscape as a whole that we're studying, is there is more and more what we call traditional money moving into the technology space. I doubt this is going to slow down. If you're looking at the very long term, total investments in the Middle East, in the MENA region as a whole in the past year, 2021, were about 2.6 billion. During that exact same period, in Israel alone, you had 26 billion in investments in venture capital. So if you want to look at the total, the size of the opportunity and how much farther we need to go as a region to catch up to the more developed markets in the world when it comes to the percentage of technology as total sector or piece of the GDP, I see a huge amount of potential, and I don't think that's going to slow down. Now, as Waleed mentioned, the region can be unstable at times. right? And also government focus is very much driven from the top. So if you see that the focus needs to shift for a certain period of time on a different angle of the economy or the political sphere, then that might be the case. To be honest, I don't see that happening anytime soon. When it comes to investment into technology, everyone knows that it's a long game, and starting the engine and then stopping it halfway through really kills the momentum and wastes all the effort and time that you've spent. Because when you're investing in VC, as Walid mentioned, these are companies that are not generating profits. If you don't keep the tap open, then you kill the companies. So I don't think we're in a position where we can risk closing the tap right now. When it comes to the investment landscape as a whole, I think it's dangerous to talk about the startup landscape or the VC landscape as one landscape. Maybe 10 years ago, that would have been the case. Today, when you're talking about startups in transport and logistics, you're talking about investment in transport and logistics. When you're talking about startups in e-commerce, you're talking about investment into retail. When you're talking about startups in fintech, you're talking about investments into financial services. There should no longer be this gap between technology companies and non-technology companies. They are now very much a piece of the industries that they're disrupting, right? So you might see disruptions in certain sectors within the technology space as you see disruptions within that sector as a whole, but I don't think you will see a total drawdown in technology investments in the region anytime soon. When it comes to the interests of LPs, you have three different sources, right? You have international investment, and that has been growing significantly, as Walid mentioned, with the likes of Tiger Global, SoftBank. If you look at total investment in the UAE, for example, if you just look at the total number of investors, absolute number, maybe 30 to 35% of them are coming from the US today, which is surprising to most. So there is a lot of international interest in the region from VCs globally because they're looking at expansion opportunities beyond their home markets where they're starting to see inflation. But this is only one side of the LP market, right? You also have local LPs, which aren't slowing down anytime soon, and you have government LPs, which also aren't slowing down. So yes, we might see a disruption in one of the three, depending on the political landscape, but seeing a disruption in all three at once is unlikely unless we see a major effect, right? There are some external factors that could help. So for example, COVID hurt a lot of industries, but was significantly beneficial towards the technology space. The Russian-Ukraine war is damaging in certain industries, but when it comes to, for example, food security, as I mentioned, no, it is quite beneficial. So with every crisis, you need to look at where the opportunity is, right? And I believe within the technology space, we've developed to a point now where I believe we can take advantage of any crisis in certain areas. But we will see casualties along the way, I'm sure, and we will see corrections along the way, I'm sure. Walid definitely is more cautious when it comes to some industries today than he was 2 years ago, and vice versa. Thank you. I hope that was helpful.
Thank you, Mr. Jamil. Mr. Max, do you have any thoughts to add here?
Yeah, I think in the beginning of COVID, when we started our company, it was very difficult actually to raise money for a climate change company. It was not seen as actually being necessary, compared to survival and healthcare and just, basically keeping your own house in order. Since then, we've seen enormous amounts of intellectual energy devoted to climate change, right? From the sovereign level, from the asset manager level, from Larry Fink and all of his CEO letters. That's actually completely changed the way that investors see climate change. And the way I sort of see it is that I used to sit in a family office, and so you're sort of at the LP level into funds, and so funds would come and pitch us every day and try to raise money. And then I spent some time in VCs, and that you sort of sit in between, then you sort of sit in entrepreneurs. And what's happened in 2019 December at COP25 is that there was a consensus among the CFOs of countries, right? The Minister of Environment, the Minister of Finance of these countries, that climate change was really bad for business. This is going to significantly increase, the risks to GDP and actually the ability for the countries to produce wealth. As a result of this, there's now kind of a cascading flow through the entire financial waterfall around the attention paid to investing in climate-related things. Right now, what's specifically invested in is still very open. There's new technology, there's old technologies, kind of infrastructure, and so on. So I think COVID has masked this in some degree. Without COVID, we'll see this in much more full display. COVID has really given us something else to pay attention to for the last 2 years. The second thing is, I think the ability for entrepreneurs and general, deals to get done online has completely changed the way we raise. So one of my really good friends in the Middle East, he and I have communicated at length about this, about ways actually to use technology to accelerate the process of fundraising and actually meeting people and actually going through this. And so he actually worked on incredible sort of VR room technology representation where you actually can sit and have a VR headset and you actually can interface with other people without having to physically be there and still have some of the nuances of body language and other gestures. And I think the third thing is from the growing sophistication, as earlier mentioned by the previous panelists, China went through a phase where they just basically spent money everywhere, and a lot of the deals were not that good, and then they have to sort of contract and sort of rebalance, and now kind of have a different approach. I think the Middle East is going to go through a similar cycle, right? So the Vision Fund backed some really incredible companies, but also had WeWork and a few other pretty black eye experiences, and that also has sort of tempered the enthusiasm and actually now the sort of responsible investment process. I really hope to see that we can create more cross-border types of deals and actually sort of play to the strength of these things, and also create more cross-border cap tables. We're actually on the deal side because now there's sort of multiple capital partners at a table. There also is a chance for these investors to meet each other and actually create and understand more of opportunities between each other.
Thank you, Mr. Max. My next question is again going to be directed to all three panelists, but I'd like to start with you, Mr. Walid. You touched briefly in an earlier question upon the kind of advancement within the Chinese entrepreneurship side and how China is light years ahead. What role do you think China played in the establishment of the innovation and entrepreneurship ecosystem in the Gulf region? And is there any strategic significance within the Gulf region market?
Thank you. I mean, just the fact that I'm here and bridging the gap between China and the Middle East and other emerging markets is testament to what is happening. I think China has done a fantastic job in terms of its technology sector, such that in other emerging markets, such as Latin America or Southeast Asia, they don't pin an American company that they want to be like. They say, we want to be the Meituan of this country. We want to be, the Alipay of this country. So actually, Chinese technology has surpassed, because of its mobile first and because of its, growing pains that it's been able to overcome, the technology sector, such that the startups in the Middle East now have a pathway to learn from Chinese tech companies and be able to implement some of the groundbreaking technologies that are there. We're also investors in NIO, which is a electric car company. So I think there's a lot of groundbreaking stuff that is coming from China. And a lot of these companies look to us as their venture capitalists to be able to open up new markets for them. In the past, China has not done very well when it comes to sales and marketing and branding themselves into new territories. And we feel there's a fantastic opportunity for us to be able to create joint ventures, to be able to introduce a lot of the Chinese technology, relocalize it. So it's not going to be a simple copy and paste, but I think a lot of the hard work has already been done. And a lot of the companies in emerging markets are looking to China in terms of being the leader in a lot of these different industries and sectors. So I think it's starting. I think we're very passionate about being, our heritage being in China and looking at not just the Middle East, but also globally and how we invest. So I think, yeah, very exciting times. And I think we're just barely scratching the surface of what can be done.
Thank you, Mr. Walid. Mr. Jamil, what are your thoughts on this?
Yeah, can you, clarify the question just a bit more so I can be able to answer it from my...
Sorry, I wanted to sort of understand what role China has played in the establishment of the innovation and entrepreneurship ecosystem in the Gulf region.
So I can tell you that at least on the scale of venture capital, it's been quite limited, to be honest. Again, MSA and Walid alone right now is probably the majority of VC investments from China that you can see in the region, right? So MSA is leading the way by miles compared to the rest. Not to say that there isn't a very big opportunity there, because when it comes to government relations or corporate relations on a later stage, there definitely is a lot of interaction between China and the region. When it comes to trade in general, there's a massive amount of interaction. I just think it hasn't trickled down to venture capital yet. I'm hoping with some success stories from MSA, it will be able to inspire more Chinese investors to come in. Now, when it comes to inspiration, at least from what technology companies are doing in China for companies here are trying to figure out what type of market this is. Is this the type of market where best of breed will survive, or is this the type of market where super apps will dominate, right? Kareem, for example, is playing a key role in testing this out, where they started off as the Uber of the region, and now they're slowly trying to become the WeChat of the region. We believe that it could be a combination depending on what problems you're trying to solve, and depending on the team that you're able to build and the level of scale you're able to achieve across these countries. When it comes to the cultural behavior of the consumers in the region, you can say in many ways it is more similar to China than it is to a place like the US. And for that reason, for example, there's a lot we can learn on the e-commerce space. You can see that maybe 30% of all transactions in e-commerce in China happen with a phone call, right? Or high touch experiences. This could be needed in the region. Another thing we need to look at is China managed to leapfrog in so many different sectors and on so many different planes. In the past 20 years, China has gone from a highly traditional economy to one of the most advanced, if not the most advanced technology economy in the world. This is definitely something that we can learn from, because we're trying to do something similar here, albeit on a smaller scale, right? So in terms of policy and in terms of business models and in terms of technology, there's definitely a lot we can learn. When it comes to cooperation, there's a lot we can learn. The problem is that China, for Middle Eastern entrepreneurs, has always been a bit of a black box. Chinese technology companies are considered hyper-localized. So it's very difficult for you to understand the strategies that they're following or the technologies and the market and the marketing tools that they're using in China, because it's so alien to what we're doing here. But slowly, I think this gap is being bridged. What I believe we need a lot more of is these types of events or panels, not just with investors, but also with different entrepreneurs to be able to share examples, organizations that are able to bridge those communities more, able to do more roadshows, share more success stories. I think it will come with time, but some early success stories are needed on every level. And we're still in the early days of this, I believe.
Thank you, Mr. Jamil. Mr. Max, do you have any thoughts to share?
Well, I think that events like this are a really good catalyst for creating the type of cross-learning, cross-dimensionality that Jamil had referred to. And I think hopefully at the end of this, there's more engagement and follow-ups, and even some of the students here would start companies actually being able to take advantage of their unique kind of NYU heritage of having multiple campuses around the world to actually give people the life experience to allow them to guide their course. I would also say that the story is very early, right? There's kind of a new chapter waiting to be written probably in the next 2 or 3 years as China starts thinking about how does it want to develop energy policies in different parts of the world, and as the Middle East also focuses on, I think, post-oil economic means of production. And I believe that one of the most exciting things that technology offers us is actually it changes the way that economic value is created. Think about the way that industrial manufacturing has been produced. Unless you have abundant local labor, you're not going to be able to compete, right? There's no way that the UAE is going to be a major exporter of much industrial manufacturing just because of the population dynamics. If we think about the IT sector, 50 people in a room is able to create, enterprise value of like $3, $4, $5 billion. And their services are able to be used by millions of people around the world because their services are AI and machine learning tools. So I think as the UAE starts to think about what types of future industrial pillars it wants to have, right? Being able to tap into the abundant amount of learning and battle experience. And even the other thing is actually rich data collection. As Li Kai-Fu had mentioned in his book, AI Superpowers, the ability to actually have massive data collection is actually what trains your AI models to be really, really powerful. All of this stuff is kind of available and quite present, right? And there's a strong demand and strong interest from Chinese tech entrepreneurs actually to bring their technology to share with other people and solve other people's local problems, right? With kind of a universal scaling stack. So I hope that 2 years from now, when we come back to the 5th or 6th session of this panel, we actually see a lot more growth and in collaboration.
Thank you, Mr. Max. Just to wind up the discussion around this topic, my next question is two parts. The first one, starting with Mr. Walid again, do you see any Chinese companies expanding to the Gulf region through, say, acquisitions or partnerships with local startups? And the second part would be, how would you advise companies within the Gulf region to actually expand into the Chinese market?
Very good. Echoing what sort of Jamil and Max are saying, MSA, we took a very strategic decision to come to the Middle East very early in order to sort of capitalize on the technology and the ability for us to do what we are doing. So, I think that we're in a very privileged place to be able to help a lot of the companies and do what we're doing. The expansion of Chinese companies into the region, so there are many different layers of that. So for example, we've invested in a company called BGI Genomics, and we've introduced them, and they've created partnerships with the UAE government, Ministry of Health, as well as the Saudi Ministry of Health, to be able to do all of the COVID testing in the background. So all the COVID tests that were happening in either Saudi or the UAE. So these are multi-million-dollar contracts that we helped facilitate, and just by creating introductions, and this is one of our portfolio company. Likewise, Max was saying about data, we've invested in a company called Yidu Cloud, which we also created partnerships with the Ministry of Health in Saudi Arabia, big data for hospitals and for the healthcare industry. So we feel that there's a lot of companies. Pre-COVID, we brought a lot of Chinese companies to come to the Middle East and to the GCC and to be able to meet with the correct counterparts in order to foster that kind of collaboration and expansion. Likewise, pre-COVID times, we took a lot of entrepreneurs from the region. We went back to China, and these are operating level COOs, CTOs. This wasn't just, let's take a picture, do a handshake, and then nobody understands what the hell happened. The very kind of, operations, let's dig in and see how these operations look at scale, such that the entrepreneurs can come back to the region and pivot and understand that, this is where it needs to go. This is how this model will flesh out. A lot of the times with innovation and technology, especially in new markets, you really don't know where to go. You're kind of trying things and you're experimenting a lot of the time. So it's very beneficial for them to be able to see it, fleshed out at scale, so that they can come in and sort of be prepared to overcome some of the challenges that they may face. So I think a lot of that is happening. Now, on the other side, when we did bring in some of the companies on the logistics side or otherwise to come and take a look at the MENA region, it was still nascent for them. I mean, these companies in China can still go to other markets and they have bigger fish to fry, so to speak. As we see the MENA region build on more M&A activity and more acquisitions and consolidations that are happening in Egypt, in UAE, in Saudi Arabia. So if these are the three biggest markets, as soon as these consolidation plays start happening, which we are seeing now, such as Foodex, such as Sari, then you are building a critical mass that makes it very interesting for Chinese companies to come into the market, because you have that network effect that is available. So I think there's a lot that still needs to be done. I think there's interest, and I think we're leading the way. Now, we don't necessarily see a lot of companies from the region going back into China. As Max also said, it's a bloodbath. It's very difficult. In China, you have to innovate and you have to stay awake and be battling on a daily basis in order to survive. However, there are models that we think that will be indigenous from this region. One of the companies, Kitopi, we took and we sort of introduced to China, Cloud Kitchens. We think that there's a lot to do with Islamic finance. We think that there's a lot to do with some of the innovation that come from the MENA region and then be exported globally. But we still think that these are early days for us to see something like that happen.
Thank you, Mr. Walid. Mr. Jamil, do you have any thoughts to share towards this?
No, I can just say that on the venture space, we've seen very little activity coming from China. Now, to be fair, when it comes to acquisition, we've seen very little activity coming from any international market. I don't want to say that there's one market where we're seeing most of the acquirers come from, but at least when it comes to investment, I just don't think we as a region have done a very good job of exposing ourselves to that market, and there just haven't been that many success stories early on to be able to justify that engagement. When it comes to larger companies, or at least from a government point of view, you are seeing again a lot more interaction, especially when it comes to technology companies, be it in renewable energy or in AI and data, etc. But from the venture space, at least today, the startup landscape in the Middle East and North Africa and the startup landscape in China are completely disconnected worlds as far as we can see.
Thank you, Mr. Jamil. Mr. Max, your thoughts?
Well, I think that's, human beings, especially entrepreneurs and also investors, were really narrative driven. The existence of one or two successful cases really just changed the way that people conceive of this. I think the president of MSA in the Middle East actually doing kind of cross-border, very sophisticated deal making has actually helped many other VC firms question whether or not they should also be there. Are they sort of missing out on something by not having a presence? And the growing number of companies being built out of the Middle East, I think also signal kind of what are the types of industries where there could be significant development. And as an entrepreneur, one of the key things you really think through is like, what are the growth vectors available to me? And actually, I want to end my sort of thought with actually some comments about the digital asset sector. Because the digital asset sector is a particular sector that actually does not require significant amounts of manual labor, can actually serve as a global audience from day one, and finally, is built on and attracted to regulatory innovation, which is happening today in the Middle East right now, especially in Dubai, especially in Abu Dhabi. So what I predict is, just as Hong Kong has given birth to 7 or 8 crypto unicorns in the last 3 years, I think Dubai is also going to give birth to another 3 or 4. And these are going to be born out of the alumni of the existing major unicorns like Binance and FTX arriving to sort of train and hire people in the sector. It also is going to come from the local entrepreneurs who sort of learn the playbook and actually are able to go to market globally. And what's fascinating about this particular type of industry is that it really changes the way you think about scale, right? Israel, as a good example, what Jim was saying earlier, has enormous amounts of concentration of unicorns per population because they develop technology and then they sort of think about the market as the rest of the world, right? Israel is basically the market for any of the major B2B tech innovations. And here, similarly, you can actually have firms headquartered in Dubai that serve 50, 100 million people elsewhere, actually, and power them with sectors. So that's kind of how I see this future entrepreneurial stories developing.
Thank you so much, Mr. Max. I think we're moving on to the Q&A portion of the panel now. So everyone in the audience, if you would like to ask any questions to our panelists, you can please type that into the chat.
So I'm seeing a question here. I'll just read it out loud. Will VCPE be involved in the operations or the decision making of the company? So the way that we work is we come in as a minority stakeholder into the company, and typically we like to lead rounds because we have conviction about the company, and we usually take a board seat. So we do like to influence, and I will highlight and underline the word influence, but we will not be making the decision making of the company. We will not be running the show. We do not understand the industry better than the entrepreneur who's in the front lines, who really understands what's happening. We are simply a support to come in financially and non-financially. So strategically, in terms of what's happening in other global markets, how to fundraise, how to get international investors to come in and be excited about the company. We can raise red flags about stuff that we see from being at the board level. But other than that, a lot of entrepreneurs think that a venture capitalist will come in and sort of eat their lunch or be able to take the company by themselves. That's not the way that it operates. We come into a partnership, and we're a minority shareholder into the company. So I hope that answers that question.
Thank you, Mr. Walid. I think the next question is more for both Mr. Jamil and Mr. Max. What is the business model of Carbon Base and Magnet? We'll start with you, Mr. Jamil.
Yeah, so with Magnet, it's pretty straightforward. There are 2 different areas that we support our clients with. The first one is through a subscription model to give them access to venture data. So for example, through a platform that you subscribe to annually, you'd get access to directories to go through and identify startups or investors in the Middle East, Africa, Turkey, and Pakistan. Or you can track the funding rounds that are taking place day by day within these regions. Or you can get access to reports that are both interactive or produced and finished in a PDF format that give you access to the trends that are taking place so that you can see how much investment's going into different sectors, different geographies, different stages, average round size by stage, what are the top deals taking place across these sectors and across these geographies. So this is how we support from the subscription side and from the research side. And then the other side is we help our clients build exposure and thought leadership within the startup ecosystem in the region. This is either by co-producing reports with them and sponsoring and creating sponsored reports for them, as we do in Saudi Arabia, for example, with SPC, or we do in Qatar with Qatar Development Bank, or Egypt with the International Trade Organization. And then what we also do to support with building exposure is we run advertising and marketing campaigns through our content platform, which is, you can say, sort of like the TechCrunch of the MENA region. That's basically it.
Thank you, Mr. Jamil. Mr. Max, the same question for you. But I think I would also club that with another question that we're receiving, which is around internal management system. I think we've got a budding entrepreneur here who's asking that question, who wants to know sort of how you build a good internal management system and hierarchy within a startup.
So we have several lines of business. One line of business is helping large industrial companies calculate their carbon footprints and arrive at carbon neutrality. We've been able to work with some of the largest real estate, shipping, and consumer good companies in the world. We also did some Chinese SOEs, like the Three Gorges, the largest hydro dam in China, as well as currently the largest logistics company in China, was in one of these deal discussions. The second line of business actually is in the digital asset sector. So drawing from my own experience being the investment lead for one of the family offices in the sector, we are actually building sustainable metaverse projects, which are either government-facing or large-scale enterprise-facing, creating kind of the bridge between the physical world and the real world, sorry, the digital world, and also tying in ideas of renewable energy and carbon into the metaverse design. And the third thing, I mentioned this briefly, is we're in the process of building what I would term a carbon central bank. And the central bank actually would serve as the origination of carbon credits and create an effect similar to the one of Bitcoin mining, except instead of consuming large amounts of energy, we're actually going to be incentivizing people to draw down carbon in all of their different locations. And if they can prove that they're drawing down carbon, they can earn economic rewards, and actually you can build a career and a monetary policy out of that. And then to the second question of like, how do you build great internal management systems? We actually have tried a lot of different tools, especially in the age of COVID. Our team right now spans 7 countries, speaks maybe 11 languages, and the way that we operate actually is completely online driven. So we have standing phone calls, we have a lot of internal chat tools, and also we have an office that we designed in GatherTown, which is kind of a small role-playing game that allows you to actually create easy to use, collaborative, multiplayer digital office environments, and something you guys can check out for future conferences as well. So that's some of my thoughts there.
Thank you, Mr. Max. I think the next question is for Mr. Walid and Mr. Max again, and of course, Mr. Jamil too. How would you advise young people to start their own, or I think to rather start their startup journey?
I'll defer to the startups and the entrepreneurs to answer this, and if there's anything else I can add, I will.
Absolutely. Thank you, Mr. Walid. We'll go to Mr. Jamil then.
So it really depends. I don't think there's one manual for this, because for any best practice, you've seen examples that refute that. Right? Some would tell you that you need to spend 10 to 15 years in an industry, develop a network, develop the experience, identify problems that not everyone can see, and then you'll have the network of talent, investors, and customers to tap into to take advantage of that. For others, it's been start as early as possible while people give you the benefit of youth. You can see things from a different point of view. You see what trends are growing within your generation, the generations before you. And you can also take advantage of that. And also you have enough time to make mistakes so that by the time you find the trick, you are still at a young age. You still have more than enough time to experiment more and take advantage of the opportunities there. The best way to sort of understand what you're getting yourself into is to get as close to entrepreneurs as possible at an early age. I don't think most young people realize the amount of stress that someone like Max has to go through day to day and how difficult it is to fight these battles. Walid, and you asked about the role of venture capital firms. I think that even though they take a passive approach when it comes to day-to-day decision-making of the company, I think their biggest area of support isn't just the financial support, of course, but the ability to support them through a network of veterans that have been in the shoes of the entrepreneurs today and can really help guide them both personally and professionally through some of the problems that they go through. So if you haven't interacted with enough entrepreneurs and seen the troubles that they go through day to day, you won't be able to expect what's really coming. The second thing is to really understand where the trends are and what venture capital firms are looking for. It's not just about solving a problem, but timing plays a very big role. So just because something sounds like a good idea to you doesn't mean you're going to be able to find the investment and the customers for that idea. So making sure you're at least tapped into that space to know what your potential customers are looking for today and what budgets they have dedicated today. And also to know what VCs are looking for today, because that might change compared to a year ago or a year from now. That's all I can say really on that.
Thank you, Mr. Jamil. Mr. Max, I'm sure you have thoughts on this.
Yeah, my own journey started actually on a personal experience. I was doing an internship at NASA, and I had a chance to meet Steve Wozniak one evening at one of the interesting gatherings that they host in California. And later on, I met some other kind of people building satellite AI companies and a few social media companies. And I was like, wow, you can actually have a career as an entrepreneur. That was like not a concept that I was familiar with until I sort of met these guys in person. I remember reading and watching a lot of videos from Elon Musk's early days of entrepreneurship, not the ones where he's now become kind of this kind of crazy Twitter person, but actually when he was in a sort of startup mode, for Tesla and Google. And there was one particular interview that was super powerful for me, actually in 2009 or 2010, actually it was Google interviewing him, where he was running out of money for both of his companies. He had spent his entire life fortune into SpaceX and Tesla. Both of them were not profitable. And he had maybe $100 million left, roughly 2 or 3 months of runway. He had to decide whether or not he was going to give that money to SpaceX or to Tesla or to neither or to both. And he described it as almost like having to figure out which kid he was going to kill. Right? You have 2 children, you have to choose which one lives, which one dies, because otherwise you're going to, both could die also. So he decided he was going to bet the farm. He was going to actually spend all of his money, split it into half, one for Tesla, one for SpaceX. And in the 11th hour, he managed to get a NASA contract on SpaceX, which saved SpaceX, and then he got another funding round for Tesla, which saves Tesla. But there could have been a different reality where basically both companies went kaput, and he would go back to square one after having a net worth of $300 million plus after selling PayPal to eBay. So that was really incredible for me, right? This ability and willingness actually to bet the farm on the ideas you believe in and actually be able to walk away with nothing and start again. If you have that type of confidence, you can do anything because you're not afraid to lose, right? Losing doesn't mean the end of your career, it just means that you have to sort of restart the entrepreneurial journey. The second thing is most people don't appreciate how much you learn while you're entrepreneuring. I spent 8 years of my life preparing to start a company, right? From meeting Steve Wozniak to 2019 was like, from 2011 to 2019, I spent time in VCs, in startups, in like research, all this other stuff, building what I thought was a database actually to empower me to start a company. 6 months into starting my first company, I was like, none of the stuff I prepared for is even remotely useful, right? And you sort of have to learn on the job. You have to continuously learn and continuously keep yourself mentally stable and physically healthy. And I think one of the truisms of entrepreneurship in any capacity is that you never really make money on your first few tries because there's too many ways for you to fail. There's too many mistakes you can do that are sort of crippling and damaging to the entire company. And you have to be willing to completely write it off, and around the third or fourth cycle, you now have accumulated enough battle experience to understand how do you hire people, how do you raise, right? How do you spot market trends, how do you execute, how do you ship, how do you get customer feedback, how do you win deals? These are kind of skills and muscles you build in the process. So I would say that the final piece I would remarkably make is, starting a company is not like a one-time endeavor. You have to commit yourself to like a 10-year path. And if you are willing to put down 10 years of your life, you'll probably most likely be successful, because you have spent all of this time accumulating all of the resources and know-how to sort of complement your own weaknesses. And after that, you actually really get to work. So hopefully for all the people watching, it's a very crazy and I think ultimately rewarding career path.
I have a big smile on my face because I agree with everything that they're saying. They spoke about timing, which I think is essential, work-life balance, fear of failure, believing in yourself. I mean, all of these things are great. If there's one thing that I'd like to add is really hone in on your value proposition and just keep iterating until you find what that is. I can't tell you the number of startups that come to us at the VC level looking to fundraise and don't have a clear grasp of what they are offering and what their value proposition is. It's like they still need to experiment a little bit more. And I would say that a lot of the times you sort of fall into your value proposition, you find it, not by design, but by experimenting, right? And that's the way that you get there. And in order, now that you know that knowledge, you should do that with the least amount of money possible. Just build the circuit from point A to point B to point Z so that you actually have a business model before you can actually go out and try to raise this child, being your company. A lot of times, we have half-baked ideas that come to us just with the promise that it worked someplace else, or why won't you give me money, or, and I really think the basics of finding a value proposition with a business model that works is key. And if you don't, that's fine. You chuck it out, you start the next one, and you keep going until you find something that you're like, wow, this has a life. There is demand here. People will actually pay for this, and then you're investment ready. So just adding that in.
Thank you, Mr. Walid. We're running a bit short on time, and we have 2 questions, but I would like to take at least one of them, and this is for Mr. Max. Do you think, or do you suggest that the founder should have a solid knowledge or a background in their specific field their enterprise is in? And of course, the second part is more about the soft skills. What kind of qualities do you think the founders should usually have?
One of the things that had a huge impact on me actually was reading a Forbes article. It was a very long piece called "Entrepreneurs Are the New Labor." And it was written by this gentleman called Venkatesh Rao, who's kind of a deep thinker on the internet. And his thesis was, with the presence of YC and many other startup incubators, the barrier actually to, nominally becoming a founder has actually dropped dramatically. So, you have a whole bunch of people watch the social network of, Zuck building Facebook. He's like, I can be that too. I'm a college sophomore. I want to go and start a company. And especially in the United States, we observed a lot of people starting companies basically be building what we call mom as a service, which basically is, watching your dog, drying your laundry, food delivery, and everything else that sort of empowers your life that mom didn't have to do now. And I think it comes back to the idea that what Walid's saying about opportunity and problem set discovery. What are deep insights of problems that you understand better than other people? If you don't understand a problem, you're not going to be able to build a company. You're going to be able to flail and try to discover value. I really believe that entrepreneurs need to have some, completely unique and unfair perspective and or resource of the world as a starting point, and then sort of, build a company after. And if you sort of start from that premise, you sort of say, okay, well, what can I do as a young person to accumulate unfair advantage? I need to have experiences and insights and access in a way that no one else has. And then that actually gives me the channel to basically, exploit this direction. And then, so that's kind of the way of thinking, right? Like maximize unfair advantage accumulation before you start the project. And then the second piece is the soft skills. Well, I think you need to be personable, right? You need to actually be able to win friends and influence people. And I think you also have to understand that when you fundraise, it's not about you per se. It's more about a template and pattern matching between the VC and what they've seen and been successful investing in and who you represent. So it's also about understanding what your kind of profile represents these people and actually finding people who your profile actually appeals to. That I think can really accelerate your fundraising process.
Thank you so much, Mr. Max. I think that is all the time we have today. Thank you so much to Mr. Walid, Mr. Jamil, and Mr. Max for their time and for sharing their thoughts and their insights. And thank you very much to the China Gulf Forum for actually organizing this panel so that we could have these sorts of discussion. And I'm looking forward to the forum again next year. And I'm going to hand it off to Mia now.
Yes, thank you so much to our panelists and moderators. This was a really great discussion, and we really appreciate all your very insightful contributions and the questions asked by the audience. In addition to the audience, we invite you to fill out the closing poll, which we will share shortly with you to provide some feedback on this panel. And we also want to let you know that you can follow us on social media. We have accounts on WeChat, Instagram, and Facebook, which we will share shortly on the slides. And yes, we will take a quick 5-minute break right now. And then we will begin our next session on politics and diplomacy at 7 p.m. Abu Dhabi time, 11 p.m. Beijing time, and 11 a.m. New York time. Thank you very much.